Good morning, ladies and gentlemen. How's everybody doing today? Hopefully pretty good. All right, so literally kept the title of the stream the same as yesterday. Earnings plays for days, ladies and gentlemen, because that's basically what we're seeing. We're seeing a lot of earnings plays again. So, when it's earnings season, I don't really have to do a lot of work. I know, sounds kind of odd, but it's true. When it's earnings season, I can kind of sit back and I really don't have to do a lot to know what I'm going to trade, because every single day that I wake up in earnings season, I wake up, I make my coffee, I make eggs, I get up here, start looking at stocks. I don't really have to do much other than look on my phone and go, what companies had earnings reports today? Oh, I know that company, I know that company, I know that company, and those are the stocks I'm going to trade for the day. Because if they had their earnings report, there's a strong chance that they had big moves. And if they had big moves, then that means they're volatile. And if they're volatile, that's the key ingredient for day traders to make money. So I don't really have much work to do. All I can do is look at my phone, go, these companies are having earnings. Those are the companies I'm going to trade. My searching is done for the day. Now I go in, make a plan, how I anticipate that it might move, and if it does move this way, how I anticipate to trade it. And that is why I really like earnings season. I think some traders overlook kind of the simple idea of earnings and how easy it is, just because they're and that's it, right? Because as a trader and a new trader, we say, what are going to be the good stocks to trade? How do I know what stocks are going to move? When should I be looking at it? And it's like 4 times out of the year, the work is already done for you. You don't have to scan. You don't really have to search. They're just right there for you. So I think earnings season is a really good thing for traders to really use, because it's basically good stocks to trade 4 times out of the year for a couple weeks, if not a month, month and a half. So it can make life kind of easy. All right, so first one here on the day is Skechers. Skechers has a gap and go setup where it's gapped up, it's consolidating sideways. There's a strong chance we'll see Skechers pop up in and over pre-market highs today. So for me personally, I'm going to be watching Skechers long for a push over the $33 mark, basically the pre-market high. Looking at it, we can't do that. We have to go to 180. So if you go to 180 day, wait, hold on, let me redo that. So this is where we're at 33, right up to this high. Yeah, so here's the thing. Skechers has tremendous amount of potential today, okay? And let me explain why. So if we go back to this yearly chart, you see this earnings play right here. By the way, little lesson for you guys if you're new to Thinkorswim, where my cursor's at on the screen. This little blue circle and red circle, whenever you see that, that means it was an earnings report, okay? Well, anyways, you see this big gap in the chart? That was from one of Skechers' earnings report. You could see it went from like 40, 43, gap down all the way to 31 something. Anyways, it creates this gap in the chart. Well, if we go over to where we're at now, and also let me go back here, then this little pop here, you see that one, that high, that's where we're basically at right now. Okay, this line I just drew, that's the $33 mark. That's where Skechers is currently at today. So put it into perspective. If Skechers can break over 33 and this one little pop right here at 33.46, that puts us into the gap fill area, which is basically this big dead space. So if it can get over this 33 mark, Skechers does have some tremendous amount of potential today for like a big squeeze, because there's nothing there to stop what Skechers from going up other than this little pop and then this gap. It's just free for all. Unless I will say this, unless there's a level in here, which there really isn't till you get to there. 37, arguably. Let me do 2 years intraday, 5 minute. Will that work? 1 hour? That doesn't work. Hold on, give me a second here. Daily, 2 years, period, day, sure. So if it breaks over that level, then the next one is going to be up here at 34. So yeah, I could see maybe Skechers up to a high of 34 today, arguably right around 34. So anyways, yeah, right? So Skechers pressing up on resistance. If it breaks this one, it's into the gap fill area where the next little blip or resistance we could see is going to be around 34. So that is Skechers, ladies and gentlemen. Alrighty, you're righty. Next one on the list is Mattel, if that's how you pronounce it. Another one that's an earnings play. The reason I like MAT is because it's fairly low price. It's actually like 15 bucks, 14 bucks a share. So it's actually fairly inexpensive. So I think a lot of you guys could actually afford this, because I know sometimes I put on, like the other day, I put on Chipotle. It was 500 bucks, which by the way, I didn't trade Chipotle like an idiot. So if anybody traded Chipotle yesterday and took my advice, congratulations. You did a great job. I'm an idiot. I didn't trade it. I've seen it coming all day. Still didn't trade it. Anyways, so sometimes I put in some expensive stocks and I figured, well, hey, this one's only 15, so that's a little bit better than a $500 stock. So, all right, so here's the thing with MAT. MAT's at roughly a strong resistance. So this makes me a little bit iffy and nervous, is I do want to say that MAT is bullish. I just don't know if the sentiment and the trading is going to be strong enough to push it over 15. 15 is a significant resistance because you can see this dip by here, the consolidation here, the breakdown here, the retest here, the retest here. So there's 1, 2, 3 solid week to month of consolidation, dip here. So there's a lot of reasons as to why 15 is resistance on MAT. So if you do follow this today, you know, I would look for a move up to 15. If it hits 15, pulls back and wants to break over 15, or is what it appears, then I'd probably watch it long. But just do note that 15 is a strong resistance, and this thing might never make it over 15 today. But it is a pretty strong gap, low price. I think it has some potential. All right. I'm going to finish going through a couple of these, and then I'm going to go to answer some questions here. Another one that had earnings this morning is EXPE, which is Expedia. Now, I'm not crazy with the way this gap looks, but I mean, you can see it went from 123 to 144, so that's about a $20 move there in itself. So if this thing moved $20 already in after hours trading, this means it, you know, up to the pre-market high from where it's at. This is 136 to 140. So if it wanted to go all the way back up to the pre-market high, that's a $10 per share gain. In the way it's consolidating, right, it dropped and it's just kind of consolidating, and the 50 moving average is catching up to the price action, kind of curling up. If this can kind of stay on this route and get a small little push to the upside, I think Expedia is going to be good for a long. And where are we at? Probably the 52-week high. Basically the 52-week high. Wait, hold on. 144 high pre-market, which puts us up to. Okay, so with where Expedia is at, Expedia basically just got into the 3-year high around the 160s, 50s area. Okay, so honestly, I'm going to have to say Expedia. It's hard. This is a hard one because Expedia is up towards that 3-year high, which arguably makes it at a pretty strong resistance. It broke over 139 up to 144. It's got room to pull back down to consolidation. Honestly, I would be more patient with Expedia. Don't be quick on Expedia. Be more patient. Because I could actually totally see Expedia doing a quick sell-off down here, like 133 is retest support before moving higher. So Expedia, just keep on watch, but I'm definitely most interested in trading Skechers today. Alrighty, now that I've covered all that and done all that, MU, bad news, sir. Good morning. All right, so MU has bad news. I haven't looked at MU today. What's the news? MU, I see no news this morning on Thinkorswim, so maybe somewhere else on the internet, but not on Thinkorswim. What's going on, Laura? What's going on, Bruce? Good morning, guys. TVIX. Yeah, so I didn't mention TVIX, but it probably would be good. You know, but for those of you that have tuned in before, it's not like you really need to hear me say this, but whenever the market is looking bearish, always put attention on volatility ETFs. Again, whenever the market looks bearish or it's going down, it's getting ugly, make sure to watch volatility ETFs. Those are going to be TVIX, VXX, UVXY. Again, just go to Google, our almighty friend Google, and type in volatility ETFs, and you'll probably get a list of a couple. And yeah, those are basically going to go up when the market goes down. So today, TVIX might be a really good one just because, again, the market's getting bearish. Okay. Or actually, let me rephrase that. TVIX is doing well because market volatility is increasing, not because the market's going down. Top earnings stocks you watch each year. There isn't really a top. It's just the top stocks. So the biggest name companies I always watch: Facebook, Tesla, NVIDIA, Advanced Micro Devices, Amazon, Google, maybe I already said Netflix, Skechers, Expedia. Again, big name companies you see all the time, usually have great and fun earnings. Starbucks pushing to all-time highs. Okay. I don't like ZNGA. It's not a stock I trade. It moves very slow. So if you're going to trade ZNGA, there's nothing wrong with trading it. I personally just don't trade the stock. But if you're going to, anticipate that you're not going to make tons of money very fast. It's a slower moving stock, so it will take longer for your plays to develop on ZNGA, most likely. COTY did have earnings. I will touch on COTY. So with this stock, you know, it didn't look too bad when I was looking at it earlier, and figures it went higher. So yeah, I was saying that COTY wasn't bad earlier. I liked how it gapped up and was consolidating. This is a lower price stock. It's moving on earnings. Again, the stock is this stock COTY has been downtrending since 2014. So to say the least, it's a terrible stock, is what it appears. Again, it's been downtrending for 3-4 years, since 2014. That's 5 years. It's actually probably 4.5 because it was the midway of 2014. It was in the beginning of 2019. So really, it's only been 3.5 years it's been downtrending, to be exact. But you get the point. You know, I feel that today, COTY might be like a good intraday trader, but it will most likely resume its downtrend to the downside. But I do see some potential on COTY today. With where it's at, it's got some resistance at $9 where it's at, and it has resistance at $9.50. Then it has resistance at $9.68 and arguably $10. So it's got some resistance ahead, but there's probably still going to be some good intraday plays on it. I would say watch it long, considering it broke out as consolidation to the upside. So right now the stock is more bullish. Good morning. Good morning, HYRE. Sure, that was a stock yesterday that started performing, but then ended up crapping out. Yep, I mean, that sounds about right with HRYE. I mean, there's really nothing much more to it. I wouldn't expect a whole lot of moves. It's probably going to trail to the downside if I had to guess. But yeah, I mean, there's really not much there. Not a lot of volatility, not a lot of movement, not too much volume. I probably would not be trading HYRE in terms of day trading right now. How many times to say arguably? I don't want to. That'd be a lot of times. But thanks you for noticing. What am I most interested in? Skechers and MAT. Those are the two stocks I like the most right now. I did look at Skechers, yes. CBIO. CBIO for Mr. Brooks, or could be Mrs. Brooks. I don't know. Okay. But Mr. or Mrs., he or she. Brooks. All right. You want CBIO. I feel like if I remember correctly, CBIO was like around $1, and then it actually ended up picking up. Am I correct? Let's see. Whoa, don't want to do that. Don't want to do that. 1 year day, CBIO. Maybe I'm wrong, or maybe I wasn't. So this thing is actually getting destroyed recently. From 37, gaps down. So that was not on an earnings day, so that was probably negative news regarding FDA, preliminary results, down to 620. Is that correct, though, on the day? Right at 620. What do they do? Cal reports positive data from trials. Okay, so the thing is, you know, depending on how you want to do this, right? Bioscience companies, same thing. Any bioscience, any therapeutic, or even pharmaceutical, any company that has to do with creating new medical products, new drugs, new therapy products, anything like that, they are extremely high risk stocks in terms of investing, because at a split second, something like this could happen where the stock goes from 26 to $8 overnight while you're happily sleeping away and having dreams about unicorns and horses. And then you wake up the next day and you go, oh my God, and your stock's down 70%. And that will happen when a therapeutic or a bioscience company fails one of their phase 2 trials or phase 3 studies, or if they get bad results back on some of their tests and trials. You know, if they kill some patients, which probably has happened, and I think it actually, we won't get into that, but, you know, anytime it's a bioscience company, therapeutics company, and they fail one of their preliminary results, if they don't get approved by the FDA, they are very susceptible to aggressive sell-offs, because the only reason people are investing in the stock is because they're banking on their therapeutic drug or their new product to really disrupt the medical market or medical industry, and that they're going to become a big name player in the sales of a new medical device, new drug. And when that fails, that's usually the only thing they have going in the pipeline, right? Like if today Amazon was like, you know what, we're not going to do our drone delivering service. Like, oh, too bad. You're still going to be a massive company that fulfills tons of orders all day long, so nothing really to worry about. But when the bioscience company that you're invested in says, hey, our number one product we are working on is a complete shit show and failure, what do you think is going to happen to stock? It's going to tank, because they just told you their whole business is worthless. So that is why these bioscience and therapeutic companies are extremely high risk, because typically they have like 1 or 2 things going for them, and it's all speculation until it works. So you're susceptible to things like this. So in terms of investing to BIOC, I would say be careful. In terms of trading right now, you can see it's not extremely volatile, but you can see one little thing here. It is sort of on a little bit of an uptrend. 1 second, right here. Okay, it is on an uptrend here. You can see this was the low. We hit a high. We came down, we bounced, we came up, and we kind of jerked, and now we're curling back around. So it's possible that BIOC is actually going to kind of push up today, arguably. But again, look at all the consolidation here. There's a lot of consolidation that drove it to this breakdown. So it would take a lot of work for BIOC to even get up and over $10. And if I had to be honest, I would say probably don't trade this. If you're in terms of like day trading, I would say not to trade it, because there are better stocks out there right now. So thank you, Mr. Brooks. I do appreciate it, sir. And then ACB. All right. And then I will take a look at ACB for Mr. Howard Dempsey here, and then it's going to be close to 9 o'clock. We might have a little bit of time to run through one more thing. So let's take a look at ACB for Mr. Howard Dempsey. All right, so as many of you guys know, stocks or weed stocks, marijuana stocks, they have been selling off recently. And this is obviously due to the fact that most of the stocks were overextended in the marijuana sector. Let's just call it the marijuana sector, even though there isn't really a true made marijuana sector. We're just going to call it the marijuana sector. So in terms of the marijuana sector, all of the stocks had recently been pushed up for reasons of hype. just a lot of hype around marijuana stocks, right? So if we look at Cron, you've seen Cron went through this big run, big, massive, nasty pullback, right? So that's kind of what we were seeing, is we had a big run in a lot of the marijuana stocks, and of course, that just trickled over into every single marijuana stock. So every single stock was having a nice run. So if you're asking about ACB, personally, for me, right now, ACB, I like to say it's actually a sell. Or let me rephrase that. You know, if you bought ACB down here at 5, or you're in ACB from like 6, then I would be holding the stock. But if you bought ACB around like 7 or, you know, 750, this is where I'd be selling, right? It's only if you're in ACB around the 4s or 5s or 6s that I'd be holding right now. If not, I'd actually be waiting for it to pull back a little bit more, even down below $7. Or to $7. $7 is a fairly good support. You can see it had this kind of rejection point. It broke over 7, broke over 7, broke down 7, held below 7, broke out over 7, held 7, broke down 7, broke out over 7, broke down 7, held 7, held 7. So 7 should be, after saying all those 7 should be a relatively good buy point on the stock. If you want to be a little bit more picky, I'd be looking for an entry down around 566 to 6. But nonetheless, I think ACB is a good buy around the 6 to 7 price. This is the 3-year chart on ACB. If you look at the 3-year chart here on ACB, you'll notice that it is uptrending. We had the big move, the big spike, the big sell-off, the bounce, the recovery bounce. Now what we're starting to do is we're starting to trade like so. So if you look at this chart, this is 3 years. So in 3 years' time, this is the start of a bullish pennant. So it's possible, you know, in another year's time, this forms a bullish pennant and actually breaks out, you know, big time into the 13s, 14s, 15s, 16s, 20s. That's a long way out and a lot of things can happen. But so far, even on a 3-year chart, ACB is bullish. Right now, I'd be a seller on ACB, and I'd become a buyer maybe in a couple days to a couple weeks on ACB. All right. And then I will do one more thing. A lot of people asked about Cron, so I will look at Cron. All right. Cron. This will be the last one on the day. So, so on Cron, guys, this is very usual, what we're seeing so far. You know, when you look at Cron, you go, oh, it pulled back 2 times and it had this really big green day. That really big green day is what makes everyone think, oh, I should have held and it's going to continue going higher. And it might, it could. But this here, this big pullback and this big green candle bounce, that is normal, right? Because if a stock goes from 25, crashes to 18, and you have millions and millions of people shorting the stock, what do you think's going to happen? It's going to have a short squeeze or a bounce. So this is very normal, right? Top, selling down, and we get a little recovery bounce. That's normal, just as it is when we're going up. Ready? Look, we're going up, 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 big push up, massive pullback down, and then it continues, right? Extremely big drop down, pull back, continue. So it's most likely that this is just a short-term bounce from short sellers and some dip buyers, and then we're going to try and roll over and continue down. If the rollover fails, then we will start channeling into consolidation and a pattern. So if we do not just roll over and break down today, tomorrow, or the next day, then the stock will go into consolidation where it then might break to new highs if it forms into a bullish pennant. At the same time, if it doesn't break down here in the next couple days, it'll probably consolidate into a bearish or bullish pattern, which then leads to a breakdown within the next week, 2 weeks, or 3 weeks. So right now, the short sellers on Cron are hoping that this thing just rolls over and it continues down and it breaks below 18 and continues going. If you're a bullish trader, you're hoping that the buyers are strong enough to keep it up and keep it consolidating. So there's really 2 outcomes. Either it really drops or it consolidates. I'd be very surprised to see this push into over 25 in just one swift push. So for Cron, I would probably be neutral on Cron right now, or just use it for short intraday scalping right now. But for me, it's either short biased or short intraday playing. I wouldn't be long on Cron at this moment. No, wouldn't be long. If anything, neutral or a seller on Cron. Indicators I look to get at a trade are volume, resistance, support, moving average, pattern, sediment. Basically it, news. Yeah, so Daniel, the live trading room was not through Discord. It's still through Teachable. That link in Discord would just take you to Teachable. So just log into your Teachable account and the live trading room link in private room will be right there when you log in. Other than that, guys, that's all I have for you this morning. So I do appreciate the support and tuning in. I hope that helped you guys decide on what you might be trading for the day while you learn something new today. Awesome day, good day. Hopefully you guys all stay green. By the way, there's 41 people who like the video. We have about 700 people watching the video. If you guys could all give a thumbs up before you head out the door, that would really be great. It helps out my channel much. Thank you guys very much. Give a thumbs up. I'll see you guys not tomorrow because tomorrow's Saturday. So you guys all have a good week, and I'll see you come Monday morning. All right, take care.